Burgess and Bolton's weekly wrap-up.
So welcome everybody to the first of the 2021 Burgess Bolton weekly wrap-ups, where we look at everything to do with the London market, technology, culture, change, and everything in between. This week we are going to be giving our hot picks, I suppose, for 2021. So looking forward to what the hot issues are going to be in the London market, and perhaps reflecting a little bit on what's happened, and looking forward to what's going to happen into the end of this year in 2022. Obviously, we're no Mystic Megs, but we'll give it a shot. But as always, we start with the news. So first news is we have a new year, and look at that, then top quality graphic for you, laser display board. But yeah, we've got loads of news already. We're only 5-6 days into the new year, and we've already had some crazy stuff going on. So we have vaccine news, which I'll come on to first, but then we had President Trump and all the stuff in America the last couple of days, just absolutely nuts.
So, yeah, shocking, really, quite frightening, really. I mean, if something could be more frightening than the vaccine, they seem to than the COVID, they seem to have found it.
Yeah, amazing scenes over there, quite extraordinary. And then in vaccine news, which I've also got a little clip for, as we always do, I got COVID. Can you believe it? I've got it right now. So yeah, I tested for COVID. No symptoms, nothing. I only got the test because my wife is a police officer and she found out she's got it. So yeah, very strange turn of events. I had a slight sniffle, is what I'd describe it as, but nothing more than that.
So you actually have it right now. This is the first.
This is it. This is breaking, I suppose. But yeah, I've got it right now. So I tested.
How are you feeling?
I feel fine. This is the weird thing that, as I said, I had a slight sniffle. I wouldn't have even considered it. It wouldn't have stopped me doing anything in any other time, and didn't even think about it. Haven't been out. Luckily, I haven't been anywhere or done anything. We've been sticking to the rules pretty tightly. But yeah, I was quite shocked when I got a positive result. And now, of course, like you were in the summer, I'm now isolating, can't go out until next weekend. So yeah, it's been
just news for you. There's nothing out there to do.
No, I know. It actually
not missing anything.
It stopped raining on Thursday. I was going, oh well, at least it stopped raining. But yeah. Anyway, so that's kind of my news. Have you?
Kudos for not laying it on too thick. That's good.
Yeah.
And I'm glad you're okay.
Yeah, I think it is a word to the wise, though, that this stuff is, you have it and you don't know anything about it. I mean...
yeah, that is. It's amazing, isn't it? Yeah, it's a weird old virus.
It is, indeed. You get up to anything good over Christmas, Ben?
No, very quiet, as I think a lot of people were. I found it was good to have the break. I think you and I were saying, and lots of other people were saying, just how tired we were after last year's kind of intense, intense in all sorts of ways. But I think, my end of year, and I think your end of year was very busy. And I think just a break from that was really good, actually. I feel slightly refreshed, although I think the coming back to work has been really weird. I think it always is in January a little bit. It's not something I ever look forward to, but this year in particular, it sort of feels like we've just had the holiday period kind of almost extended. But I'm beginning to get used to it. I'm beginning to believe I'm actually back at work now. And doing this, of course, that's it. I'm back in the groove.
Yeah, good stuff. Right. Smooth things up. So we are going to kind of explore what's going to be hot for 2021. And I think, just to put it in context, I've just been thinking a little bit about kind of where we are and how I feel about things. And for me, I think last year was a period of immense disruption and uncertainty. And with COVID and what we had to do as organizations and businesses to respond to that, but then the uncertainty going forward to when the end date might be. And now we're in a kind of transition phase where we have a vaccine on the horizon. There's still uncertainty around the timelines, but when you look forward to 2022, you can certainly say that that business environment and that landscape is going to be completely different to the one in 2019. And I think it's going to be really interesting over this year how organizations respond to that. You know, it's going to be different from last year, because last year you had that burning platform that you had to respond to that lockdown. You had to get people working from home. But how do you continue that when it's just starting to be a bit of a grind, but you can see the light at the end of the tunnel? And also, during this time of uncertainty and change, it isn't just us and our organizations that are changing. It's our customers' appetite for risk, their expectations around service, about how that's delivered, the speed, over what channel, when they want it. There's a whole load of stuff that is out of our control that we'll need to respond to. And so I think I'm pretty positive about 21. I was impressed by the way that most organizations were able to pick up the digital theme and move people to work from home. It's going to be really interesting to see how they grapple with that into 21.
Yeah, I completely agree. I mean, I think it's interesting working in research, because you always think, well, what's the demand for information or intelligence, and how's that changing? And I think last year everybody was picking up the pieces, trying to work out what was going on. But towards the end of the year, I had a lot of conversations with clients, and in the words of the song, there are more questions than answers. I think that's one of the things I noticed, is there are lots and lots of questions about how are people going to be working, what's the environment, how are they going to respond, how are we going to trade in the market, what's happening there. So while there are things that we do know that are happening, and we'll talk a bit about e-placement and so on, and technology, there's also just this sense of a kind of pent up kind of mood, if you like, with people as to what they're going to do and where. And all of that is, we feel, just around the corner, partly because, in a funny way, I think the vaccine, rightly or wrongly, has kind of foreshortened, if you like, the idea that we're in this situation for a long time. And that's an interesting, fascinating business situation, because you suddenly got, well, we were kind of drifting along a bit, and now we've got this, well, there may be suddenly, there's going to be a scramble for getting everything right. And we know very well, and talk a lot on this show about, just all the things that the insurance industry has got as challenges. But that's on top of this, we're going to have suddenly maybe a sudden turnaround, maybe suddenly people are back in offices. I don't know, and I don't profess to know how long that will be. But when people have a stab at it, some people are saying, well, not till the end of the year. Some people are saying, well, it could be spring. So we've got a classic sort of optimism versus pessimism sort of tension going on. But at some point, everybody will have to get real, and it will, we won't be just sitting at home in front of computers anymore.
Yeah, it's going to be interesting. So we picked up a few themes that we're just going to run through. So I'm going to start with technology. Then we're going to just talk a little bit about the future at Lloyd's and Blueprint 2 and how that's moving. And I think then we're going to just talk about some of the implications for organizational culture, people, and then just looking into 2022. I think it'd just be interesting just to perhaps give a bit of a prediction on what we think, and then we can look back at it in a year's time and go, whoa, what a lot of nonsense.
Could be wrong. Yeah, we'll be completely wrong. That's all we do know.
Why don't we do that? So I want to talk a bit about technology. So technology is of massive interest to me, has been for many years. Obviously, we run the conferences around a lot of this technology change. But as I was saying in the introduction, the way that digital has been embraced by organizations has been generally a success. And when I talk to people in the market and doing the research for the events and the conferences, certainly there is a massive opportunity, and that appetite to ingest technology and just changing the mindset around how technology can enable processes going forward is going to be fascinating. And as I said, it isn't just about organizations enabling work from home in a better way. They're going to have to meet customer expectations in a completely different way. And definitely the legacy technology systems that organizations currently have are not fit for purpose, and they will need to change. And that is becoming more and more critical. And if you look beyond the next 12 months and you look towards the new ecosystem, the new insurance ecosystems that will develop, that will be digitally around digital platforms, then those legacy technologies are not going to work. And I think that is now going to be the opportunity. There is money in the market, people are making good money. And I think those that invest now in the changes to set them up for the next 5 years or so will be the winners in the future. And they will then be able to create organizations and processes that will attract people and, be the places that people want to work. It's that's kind of my view anyway.
So I think in answer to that, I generally agree with you, Jeremy, but I think there's some challenges as well, and I hear this in the market, is that the market has always talked about we need to mend the roof when the sun's shining, and this is that time now, presumably with rates going up. But I also hear that there's a lot of businesses that are not doing that. They're simply just taking advantage of the rates and seeing that is their savior, if you like. And I get that there's a sense of relief after so many years of not making money. But that isn't going to fix, as you say, the structural problems of the industry. So I would completely agree with you that it's going to be those foresighted businesses, the ones that have really got strategies, that are really thinking not about the next 2 or 3 years, but about 5 years' time, 5 years' time or so, when probably rates will flatten out again. We can't be sure, but that is what these businesses have got to build towards now. And I think some are not doing that, and I think some are just going back to the same old behaviours that they've always had, and short-term trading type mentality. Whereas others, I think are thinking ahead, and that's both some of the specialists and the large players. But there will be winners and losers. There really will. Yeah.
And perhaps that leads on to your point around consolidation, Ben.
Yeah. So just a quick stat from research that we've just completed through last year. So this came out in December. We're talking, one of the measures that we look at is consolidation, market consolidation, and then this is London market numbers from brokers in the London market placing business. How much business is going to the top 15 insurers? So if you look here, 2014, about 54% was being placed with top 15 insurers. That's gone up by 10%. Well, it's gone up 10 points, more than 10% as a share increase. So that's quite significant, and it is. I think if you kind of read the news and listen to what's going on, there are still players coming in. There are syndicates in a box. There is still things happening. It's not as if we're getting fewer players in real terms, but I think this is the reality: is that more and more businesses going to these larger players, and that presumably, I think with the Aon merger with Willis this year, that will probably accelerate some of this even more. So more consolidation. I think that has implications for competition. I think it means that the big players will really be, that will ratchet up the competition even more. And again, back to the point about strategies, market positioning. Those that have got themselves sorted out will do much better. And I think it's fair to say that a lot haven't got, a lot are not in a good place. At the moment, they've been through very rough times, and mergers that haven't gone exactly to plan. Let's be honest. So there's a lot of players who are in quite weak quite vulnerable positions, I think. So I think we will see divestments probably as well. But I think fundamentally this will still be shuffling around with more business going to the to the largest players.
Yeah. So yeah, I think I agree with you on those points as well.
I mean, I thought, Jeremy, that would slow down a bit, because of because of the market, because of the capacity, a bit of a capacity crunch. We'd get brokers saying they were using a lot of smaller players to fill the slip up, but that's not really. It's still the same trend is still pushing forward of consolidation, which is interesting.
It's interesting. Do you think that is because we've talked about brands before? We might talk a little bit more about them, but that people are in uncertain times, they are falling back to brands that they recognize and know and trust. It comes back to that thing about IBM. No one got fired for hiring IBM.
I mean, there's been the research is showing that there are some issues. I mean, remember this, particularly London is a B2B market. It's a wholesale market. So, everybody kind of knows the score as to how business works here. So there's, brand doesn't work in exactly the same way, but there still is a kind of flight to reliability, you might say, and definitely we've seen that, the COVID situation, the claims did cause a bit of a wobble in the middle of the year in the London market, where there was concerns about commerciality and whether claims would be paid and so on. I think that's largely been managed well by London because it's wholesale and there aren't so many COVID, apparent COVID claims in the same way. But when we look at the SME market, brands have definitely been undermined there, and there's definitely a flight to those larger players. And the other thing I think is that technology plays into that. So we're seeing that some of the big composites, for example, who've got claims portals did very well through COVID, simply because their brokers were able to pick up the MI and the updates on the claims through the portals, and that worked really well, and it alleviated, I think, the pressure on those teams, so they came out much better on service. And I think I think there's a good argument there that in certain managed well, technology can help with customer service if it's done hand in hand with people. So those sort of things are we've learned those things, we've seen those things, and they are leading some of those players to talk about now other technologies like live chat and things like that are coming in more and more. So you are getting quite quick movement, I think, from what we might see as basic technologies. Just a portal. It's not too exciting. It's not that necessarily that difficult to do. And you'd imagine we would have had those, for years, but we haven't. And that's quickly moving on, though, in those businesses to say, well, what else can we do? And so that is. And brands, that's the brand. The brands are represented there to an extent if they innovate.
Yeah, absolutely. So just before we move off technology, I think the other thing to say is the future at Lloyd's and Blueprint 2. That has data technology as an enabler to an end-to-end marketplace. I think that how that develops over the next 12 months and whether they can truly deliver, as we've talked about many times on the show, tangible outputs that they can go, right, this is what we've delivered, this is what it's achieving, these are the dollar sign savings or the opportunities you now have. I think that's just going to be critically important if that momentum is going to carry on around the Blueprint 2.
Yeah, I think to some extent, if we're talking about crystal ball gazing, I think my take would be that it probably won't work in all sorts of areas. It won't deliver in all sorts of areas, but it will set the tone and it will set some of the pace for change. Now, the big question, I think, is whether that is set by the insurers themselves, and I've talked to plenty who say, well, some of this is good and helpful and some of it we're already doing. So I think that will work its way through into the development, I think, of Blueprint. And I think the other thing I think around e-placement and technology is that effectively I think the biggest thing about that document is it opens up competition. in the market, which has previously sort of been controlled by Lloyd's and the institutions. And if you can really let that, if you can really encourage that. Now, I don't know whether Lloyd's will. I don't know how invested they are in PPL and so on and so forth. But I think if you can really encourage that software development, innovation, backed by capital, because that's what's being said, is that capital is coming into the market now to support this. There'll be tons of failures. There'll be things that won't work, but ultimately we will work. Competition will work well to create a more healthy situation around products and services, and I think that will, as we'll talk about in a minute, impact then on people, which is the most important element.
Yeah. Okay. So let's talk about insurance culture, Ben. We talked about it a lot on the show and between ourselves, but do you want to kick off?
Yeah, I mean, what I'd like to say, I think, is that almost everything that I looked at last year and came to a point, almost everything in the end came back to the culture of the industry and whether that would allow stuff to happen. And I think that's what everything just keeps coming back to that point. And I think that is the question really, is fundamentally, is the culture going to shift enough or start to shift enough in the market as we go forward to really allow all of this good stuff to happen? We've started to do research. So we're doing research around things like employer brand and employer choice, because we think and we know that will be important to people, particularly as they come out of COVID, but also because there is a battle for talent, and not just a battle for attracting talent into the insurance market, but also within the market. So you're reaching a kind of perfect storm, I think, in a way, on people, where they're going to the best people are going to see the future. They're going to see what they can do. They're going to see where the technologies are being invested. They're going to see the sort of businesses they want to work in, and they'll make up their minds. And that will be to the advantage of those that have done well on this stuff. So I think that's really important. I don't know if you've got the slides up there, but there's some stuff here. I think that Lloyd's, I was just looking back at what Lloyd's has done around the dashboard and things. Now, Lloyd's is setting the tone and setting the narrative really for culture, and it is for a number of things. Now, I think that's a good thing. Whether they are whether that's a kind of catalyst for change, or whether they force change, or whether it just sets the tone, I don't really know, and I don't suppose Lloyd's does either, really. And I think that probably is evident in what they say. But I do think that they are setting out some fairly challenging, facts about the market. And one of them here, which is that most of the companies in the market don't address culture at a board level, and don't even have it as an agenda item often on the board, on the risk committee. So, so this point, which is really critical, I think, is it is an asset. It's whether, in the end, for me, it's whether culture is important to the bottom line. That's what's going to persuade companies and businesses to change. And I think that is, one of my other kind of hot picks of what I think will happen. It'll go. We're not talking particularly about ESG today, but I think all of that too will concentrate minds on, what the businesses should be talking about and developing with their people.
Yeah. And I also think on this point, I think the conversation that has shifted from kind of some of the woolly stuff to do with diversity and inclusion into actually this stuff makes a real difference to your business and to the bottom line. Because if you have the right culture and the right people in place, they can solve your customers' problems quicker. They can do it in a much more empathetic way, and you will see the benefits in retention or increased business. And the problem with it, of course, is that it's difficult to put a hard metric on those things because they're all kind of soft kind of areas and quite challenging to measure.
Yeah, and I think it has been seen as a soft issue, but I just think it's going to be so important when you're adopting technologies, you're changing workplaces, you're looking at how people work differently. All of those things are about people. And people will be looking now. Some businesses are already talking about it. Andrew Horton at Beazley, for example, is very much out there talking about that they're going to have a different type of workplace. And so are others. I think Aviva's been talking about it as well. So businesses are seeing this as competitive advantage, not just if you like, a kind of moral issue or a soft issue, as you said.
Ben, you mentioned ESG. What does that stand for?
So that's basically the climate change type stuff, all the regulation that's going to come in around businesses having to prove and show authentically that they are doing that. And of course, Lloyd's has come out this year saying that they're going to be not supporting fossil fuels businesses, I think, by 2030, which was a major statement, actually. And that was just done over the new year. Bruce Carnegie Brown announced that. So that is that stuff is massive for the market. That is a major change, and it's factual stuff, which is, are you as a business kind of aligning with what Lloyd's is? And Lloyd's is determining that will be the case. It will be not invested in fossil fuels. We won't be insuring those businesses in future. Big statement from Lloyd's that. Yeah.
Thank you. And then I think you've also got some data around the underwriters report. I think you've got some initial data.
Yeah. So this is just we're looking at employer brand, and we're just to give you a sense of where we are. This is a piece of data from underwriters as to whether they would recommend to peers or colleagues businesses to work in. So I'm not going to say which businesses these are, but these are results on a score of 0 to 10, a net promoter score, which some people will know, showing which, and each of these numbers vertically are insurers. So the one at the top, 2.9, that is the average score given to a particular insurer as to whether underwriters think it would be a good place to work or whether they would recommend it. So in other words, they're giving it a 3 out of 10 on average, and hardly anybody is saying that they would work there themselves or recommend it to anybody else. Now, that's a big issue for that business. But if you look down, you can see the amount of red on this chart. And it shows that there's very few businesses, really, that are getting sort of glowing accolades. I mean, I'd love to compare this with a Google or an Apple or a Unilever or some of the other big businesses. I think this is really terrible. It is underwriters, okay, and underwriters can arguably be a bit kind of sniffy about everybody else other than the one they work for, and I'll take that. I'll take that one on the chin. But I still think these are terrible results, and I'll show in a sec. I'll show you some verbatim and some of the reasons. But to me, this shows that there's been virtually no effort, in a way, to convince people as to why this is a good place to work. We're a good place to work. They probably said, we'll pay you quite a lot of money and we'll bonus you. But this is kind of the point that people are, if you treat people just as kind of financial assets, this is the result you get, right? Now, how are you going to attract people if 94% of these are not underwriters who work for that business. These are the ones you might want to attract, I was saying, well, I wouldn't, and yet there are some on here. You can see some of the green ones that are coming through, and they are actually, so they've got nearly 100-point difference on an NPS score. So whoever they are, I'm not going to say who they are today. Please write in. They are going to have some significant choice over who wants to work for them. Before you even start talking about salary and terms. And it is, we had to check these results. We've had to check these because we thought, God, we've got the numbers wrong. They're so poor. Now we're going to look at claims, and we're going to look at broking, and we're going to look at different parts of the market and different segments. It'll be really interesting. This is just a pilot for the underwriting segment. So I'll put all those caveats on it, but it's still very telling. And if you talk about culture, and if you just want to just wind on to the next slide, I've just scribbled a few of the types of comments that are made. So these are reasons for low scores that underwriters. So a lot of these are really cultural things that they're determining. So they're not people oriented. They're not. It's the political. It's a politics culture. too much entering and exiting in markets. They're too big. Big comes out a lot. A lot of underwriters don't want to be in big bureaucracies, understandably. But why don't these businesses promote the positive benefits of being big and scale and so on? Huge personnel changes, poor underwriting results, no single demonstrable culture. And this is underwriters who typically talk about the numbers. Reputation is very draconian, not a fun working environment. Their management structure and culture is misaligned for a good outcome. The politics would be unbearable. They seem very old school. You can guess who these are. They seem very old school, managed by the white middle-class men who pop in and out of classes with the tide and a high staff turnover. Now, always look at research like this and you look at statistics and say, fine, that's a statistic. But then when you listen and see these are pretty powerful statements that people are making about why they would not work. Now, there are quite a lot of positive comments as well. And one of the things that I think businesses should start to do is to build out the positive. I think not enough of them communicate the benefits because they don't see it as important. So when you say culture is not on the board agenda, I don't think employer choice or brand is on the board agenda. I think they talk about, and I've heard it, it's like, who can we hire? Well, it's all about the money. Well, surely they might want to work for you because it's a great place to work and the money would be the secondary consideration, anyway. So a lot of work to do.
Yeah, that's really interesting. Thanks for sharing that. That's great. Right, we're rapidly running out of time. So I think you had one more slide around Lemonade.
Yeah, I just wanted to finish off. It's a bit of a news one, but I think it was one that we touched on last year and everybody's been talking about, and it may have got missed, but actually Lemonade share price, and I think this kind of sums up the market. Lemonade share price went up 76.8% in December, late December. So huge surge on their share price. Now, of course, they've had a kind of interesting period of European expansion, which I think should have been positively viewed. They had this really interesting dispute, and that's why we've put this picture up over the colour pink. So Deutsche Telekom, who uses pink in its logo, I believe, said that they had nicked their particular shade of magenta, that Lemonade had nicked it, and therefore, and a German court ruled that they had and they couldn't use it. But then they went to a French court, and God knows I don't understand the court system and libel, but anyway, it was slapped down by the French courts, and now they're able to use this particular colour of magenta on the basis that they don't compete with Deutsche Telekom or in the same market, which is probably fairly obvious. So that was a little kind of news story that was positive for them about their brand. And then they reached 1 million customers in December. So that was obviously a good news. And they made this point that it took them 4 years, whereas on average it's taken the big insurers 19 years to build up that number of customers. That's kind of interesting. It's an interesting point to make, and it's good. So all that's really positive. But, and I just looked this up, and on Motley Fool, the investor website, which I really liked, said none of those things actually had any effect at all, really. And the share price jumps just came on days when the market was trading sideways, and Lemonade wasn't launching news of its own. So, and I'll quote them. So Motley Fool is saying, pure market momentum is driving Lemonade, and investors expect that to continue for years to come. And the writer says the company is going places and the actual business is creating value quietly behind the scenes. And there's been huge skepticism, may still be huge skepticism about the fundamentals of a Lemonade, but it is going like a train, this business. And investors are piling in, and they're saying it's going to be long term. And what have they got? What do they talk about? Social conscience is one. A computerized business model, two. And they're international. So, those sort of three components, and probably particularly that computerized business model, it's just what people are looking for. So your point about legacy systems and so on, if you're looking dodgy on that sort of stuff, and actually, probably if you're looking dodgy on the purpose stuff, you're maybe going to be marked down. So I think they're really interesting to watch. Yeah, when life gives you lemons, buy lemonade stock.
Yeah. So your hot pick for 21 was to buy lemonade stocks in October last year.
Exactly. That's why I don't do stock picking.
Yeah. Good.
Don't listen to me.
Yeah. So I'm gonna finish with a final prediction, which is that I think, as I start off by saying, 2022 is going to be completely different to 2019, and I think what happens generally in a period of disruption and change is that there is a lot of innovation, and I think that we'll probably see a revival of insurtech. But it won't be insurtech in the sense that it was 5 years ago. I think it'll be much more grounded. There'll be proper customer expectations and demands that will be met in new and innovative ways. And I think there will be just a groundswell of investment in new startups and things like that. So that's my prediction for 2022, that there'll be a wave of new startups that will ride on the back of the technology investments that the large organizations have made to meet the challenges of a new customer demographic that are looking for something different and quicker and more consistent. So that's going to be my prediction.
And mine, slightly different, more general one, is I think that because I think a lot of the old lags in the market have retired through this period. I can see that in some of the data. And I think that we should, and I hope we'll get some of them on our show and other channels we use, is a kind of new group of people will be setting the narrative and the agenda and the ideas out there. And I really hope that happens. I think it will happen because ultimately it's all about people. And we need that fresh thinking and those fresh ideas. I think it's coming through. I think the institutional grip is loosening quite a lot. And I think that's what we'll see going forward, being the biggest driver of change.
Good. Right. Anything this weekend, Ben? I'm obviously not doing anything. Well, actually, I'm going to clear out the office. That's my job. You can't see it behind my backdrop, but there's a whole load of crap behind there.
Yeah, I'm slightly similar. I'm going to just be setting up a bit more of the podcasting kind of studio thing here because that's we've started that, and there's going to be more of that, and that's quite popular. So yeah, I'll be doing a bit of that, and then a bit of cycling, but that's it.
Yeah, good stuff. Yeah, I enjoyed the Andrew McKee one that you did. I thought that was really good. So
yeah, we've got. I think we've got some claims people coming up as well. So that's it. Yeah, that's. I think I'm on a podcast at some point as well from someone else for RPC. I'm hoping they'll bring that out. That'll be good.
Excellent. Right. Thanks, Ben. Thanks, everybody, for tuning in. We'll see you next week. And we'll have some guests lined up.
Good week, won't we? Yeah. Good list of guests.
Right. Very good. Have a good weekend, everybody. Goodbye.
Great weekend. Hope you get better.
Burgess and Bolton's Weekly Wrap-Up.